this is Franz again from Fractal Trading. We didn't talk to each other last week, or rather, I didn't talk to you last week. Was very busy, and I guess in long-term trend following, sometimes you can just skip a week because nothing happens anyway. You're just holding the position and following the trend. Sometimes you get stopped out. Let's bring you up to date in what is going on in major markets. The British pound Australian dollar is the market you see right here. We have been short in this since June last year. There's our first breakout, and depending on your system, in a running trend, you may add on. At least I like to add on these very long time frames, since after the initial entry, when the position gets going, you're really entering in an investing mode. You're not really trading anymore because you're holding the position, and hopefully we'll be holding this one for a little bit longer. Now, as you can see, after our first breakout, I marked a second breakout right there. We have a drop down. The market comes back into our balance zone. If you don't know what the balance zone is, make sure you click on the link that is showing in the beginning of this video here, where I explain my trend following approach. Anyhow, we have the market in the balance zone at this point, fractal created. That means that's the place where the market turns, and it will turn into the direction of the ongoing trend, as this is just a minor correction inside of this trend running down. Now, the last couple of weeks didn't really do anything in this forex pair. The stop is located right above that fractal, and now we have an up week here coming close to the balance zone. Now, this does not look too great, especially since the momentum is losing all of the steam that it had, and it doesn't really look like we are going to drop heavily to continue that move to the downside. Still, this is just interpretation. We do not want to base trading decisions on this kind of thinking. What we want to do is just look at where the market is, look at what our rules are telling us to do, and then follow that. And for us in this case, for me in this case, in the fractal trading system, what that means is we have a stop right above that fractal. And whatever happens in this space in between, we don't really care. If the market jumps up heavily next week, coming close to that stop, so what? You know, we are in profit, we are taking profits, and we get whatever the market gives us. It's really not our place, in my opinion, it's really not our place to demand how much profit the market should give us. If we were to just click the buy button here to exit our shorts, then where would that leave us if the market bounces into the balance zone just to come back down again, and maybe, as we have indicated in the weeks before, maybe hit the target area here at 143, which is another 2,000 points? We would be missing that. Now, why would we want to do that? So we're just holding the position in the British pound short. The same is true for the British pound US dollar forex pair, where we are also still short, even though this one looks even worse than the British pound Australian here at the end of what could be or what was a working downtrend. Now, this market after the Brexit here, after we sold, has been flat in the last couple of months here in this area that I'm just fading over with the mouse now. You also don't have a lot of downside momentum, price closing inside the balance zone, even though this week didn't really do anything. Stop above the last fractal that we find inside that balance zone, and then we'll just see if the market can turn around before it hits that stop, continuing the trend, or if this downtrend here, this last leg out of this whole move to the downside, is now over. We'll just have to wait and see. Also in profit here after that marked sell that I mentioned, as it was taken back in 2016. The weekly recap will show you that we were talking about this all the way back then. Now let's switch over to some US dollar related stuff. First of all, we have the euro dollar. Now, euro dollar has been part of the analysis for a long time as well. We were really looking at when this was going on here, this whole side move throughout 2015, 2016. We were really waiting for a break to the downside. So this trend that we see here all the way on the left could be continued, and we did get our breakouts here. Market comes down, but then we have the monthly support right here, and we had been trading on top of that. I did mention it. We were short from down from up here. Now we have the fractal there. Now that's where our stop is for that short. What that means is this short position didn't get going. This is not great. You know, we don't really make anything on this. Stop is in the money, but still not really doing anything. Since the market is failing to go lower, and to make that really clear, we would have to switch time frames to the monthly to show you the overall situation. You have a downtrend going on. It breaks out of this whole side move that went on for a couple of years. It breaks through it. It comes down, corrects to the side, hitting the balance zone in here, and then breaks out on the monthly. But still, the monthly is unable to continue lower here to hit what could be the next target zone. Instead, it retraces, comes back, and is now moving towards the balance zone. Now, the moving averages here, which make up the balance zone, are still located above the price. So price is below it, which means we are still in that downtrend overall on the monthly chart. So on the monthly, the euro still has a negative tendency. However, we do have to acknowledge this failed breakout here. Also, momentum indicator is showing you the divergence, which means no pressure building up to send price lower, or at least pressure not following what price is creating. That means steam to the downside. Now, as we get the stop being hit at that point, acknowledging that the monthly support seems to really be very strong, there is a possibility to go long, in my opinion at least. Now, you are trading against the overall trend. The overall trend is the monthly trend. That one is still down, as we just saw. Still, with a very, very small position. I'm looking at a 0.3 or 0.5% risk. We could take this long and see if it can hit the previous demand level up here, which would be a move that on the monthly chart, on the overall trend time frame, gives us a move into the balance zone or even above that balance zone. Then over there we would wait for a breakout to be created and then hit, and then this market could actually be a long for the coming months or even years, but that is just 5 steps ahead now. What the current situation is, our short is failing. We have a stop here, probably going to be hit very soon. If you like it, with a very, very small amount of risk, you could trade that to the upside. You have your breakout fractal here, stop would be right below here. A very small risk that is possible to achieve with the CFDs, if you like that, and you can take this long and see where it goes. Now we have other euro pairs which we won't cover right now, Euro Canadian, Euro Australian, which also seem to be failing after they broke out to the downside. Now we'll cover that in the coming weeks. Let's take a look at the New Zealand dollar here. Also very interesting. As we had this downtrend going on, we were in this what looked like a correction, and then here at the black line we had the first downside fractal being taken, which means price is breaking out in the direction of this previous downtrend. Now we absolutely want to take that, but as you can see, it went lower just to go right on top of the balance zone all the way out above it. The market has then come back down, but it's trading sideways. If this really is the correction that we have been talking about, this is a failed downside breakout which caused us a loss. We went short here, had a stop right there. We lost on this position as we were wrong to take it short, in the sense that the correction is not over. We now have a bracketed market here at this level, or at these levels. We have a downside fractal sell at that point here, 168.34, and we have an upside fractal to buy right there at 0.7486. So we'll just have an OCO order placed and wait for this to actually get going. Nothing else going on in the New Zealand dollar. Australian US dollar actually showing pretty much the same thing. Let's move over to, no, let's not do gold just yet. Let's do the US dollar index first. This has been working out to our theoretical analysis pretty well. We were long from, or we still are long from these breakouts actually. We took it up here, but as we had been mentioning all that time, we have a divergence coming up, or it's actually working out right now. We have the highest momentum peak here. We have a lower momentum peak here, but still prices went higher at that lower momentum peak. That would mean we have a divergence, a momentum divergence forming. Um, that means we are expecting a pullback and even an end of this whole movement to the upside. If you don't understand that concept in market structure at that point, please refer back to my trend following approach explained video. The divergence seems to be working out right now as prices really has retraced back into the balance zone, creating a down fractal, a fractal in the opposite direction of the trend. That is our stop. We have the stop right there. These are the long breakouts. We have a stop right here. Now, just as in the euro dollar, as you can see, the trend didn't get going. It moved up for a couple of weeks, yeah, but that doesn't really make a great trend. So the stop location is now so close to the entry points, we're not really making anything here. Doesn't really make a difference in the account. Not a situation where we add on and where we're really going, well, not all in. We never go all in, right? But where we have hopes or where the probability is on our side for the trend to really evolve. So stop right there. And just like in the euro dollar, you might as well take this short now since the divergence is playing out and market structure is just all the way perfect in this US dollar index. So with a very, very small amount of risk, as I mentioned before, you could take this short and see if the market could come down here to the previous supply area. Now let's move over here for the last market, for the last asset group actually. We're looking at the Nikkei index and then other indices worldwide. Nikkei index now not really having done anything over the last 2 weeks. It's still in that side move here, but it's holding so well above the balance zone. And look at how it retraces again this week, closing above that green moving average here, which is the upper border in this case of the balance zone, and just respecting these levels or this moving average as support so much. Look at how many weeks there are in here where we have candles with quite a few points of wigs in there, which would just mean that market is really rejecting this kind of low area and it's just bound to break out and move higher. And it's just my opinion here, but this is what the technicalities of the chart are telling us. But it's my opinion, if you look at the worldwide or the global indices, every market is just keeping on moving to the upside. Now, it doesn't matter what you read on Twitter, it doesn't matter what Gardman says or CNN or whatever. Follow the price, just the price is the whole truth that you will ever find, the only truth that you will ever find in this trading game. No holy grail, no advisor or whatever who will tell you where the market goes. I mean, people are going crazy if the S&P is down 1% in a week. Now, what's that about? Don't you have any outlook for the overall picture where you just look at the overall trends and just stay in the stuff that works and keep on holding it as long as your indicators or your philosophy gives you the kind of fundamental reasons to stay with the position. Now, of course, it's easy for me to say as that's my whole approach, but I don't really see why people who have jobs would be jumping around, getting in, getting out of the market in the afternoons when they should be spending time with friends, family, or doing some work around the house or whatever. Just hold that stuff. If you are able to hold it, then the probabilities in a long-term focused system are just so much on your side. There is no reason to go to a 5-minute chart unless trading is your full-time occupation and you actually got to make a living with that. But that's not what we do here with the trend following approach you see me doing every week. Now, I have a job, I get some income from that job and I make my life with that job. I make my living with that job. And this is just additionally, I'm just investing. I'm building a kind of a second pillar for an income here. And the indices in the last couple of months are really proving that it's the right approach to follow the trends and not to guess anything. Don't even watch the news, read the newspaper. It's pointless. And this week shows that very well again here. German market, German DAX index, breakout levels down here. As I mentioned a couple of weeks ago, the first breakout gets taken, but we're stopped out in this area here. Prices retracing just too much into the balance zone. But the second breakout to the upside occurs. Now, I really look at stupidity being my edge here. I'm just following the market, and if it fails after taking this long breakout, which of course I will enter upon, if fails again, then a third breakout occurs, I would again take that. That's just because the overall trending time frame, the monthly chart, but you can also see it in the weekly chart. After the correction is done, you get just your breakouts to the upside. Why would you not follow that? And now we're just holding the position. The breakouts are at work, or this breakout here actually, this one we got stopped out of. This one is at work. We're holding the position. There are multiple add-on opportunities in here, which I don't like to talk about because this is really individual at that point. Probably because I'm also not too sure yet how I'm treating that and how much risk I'm taking on that. I still got to figure out some stuff in that regard. But that's just individual. I'm just saying there is the opportunity on the long term to take these kind of add-on signals. And as you can see, the DAX, one of the most bullish indices this week, it went down here. It was actually lower than the previous 2 weeks, and now it's closing almost green for the end of this week. And we're just expecting this to exceed the high that we saw here around the 12,400 mark. It could go much higher. We don't set targets. As soon as we get fractals inside the balance zone, the market is telling us that that's an important support level, as that this is where we have buyers coming in, where the market wants to turn, and that's where the stop will move, and we'll just trace the stop behind the market all the time until we're stopped out. S&P next indice here for the week. We have a lower close, lower than the last 3 weeks, but still staying strongly above the balance zone. Absolutely no reason to doubt this uptrend. And just like in the DAX, just like in the Nikkei, this is a position to hold on to, even though that means not every week is the greatest week, of course. Let's take a look at the UK 100 FTSE index. Just like the other markets, moving right through old all-time highs here where the supply is marked, and since then just going up. Now in here we do have a divergence forming, which we don't see in the other markets, and we are closing also pretty low, but still staying above the balance zone. This might not be moving the fastest. This, in my opinion, from the technical perspective, has the most chance to retrace into the balance zone and maybe enter kind of a bigger correction mode, approaching the old all-time highs from the upside again, finding support, and then moving out. If this really is a long-term bullish scenario, still then after it has done that, it would really just take some time, and we'll have to see how it behaves once it enters the balance zone. Now, for now, this is still up. If you're long, you're holding that long, and you just wait where that fractal inside the balance zone occurs. Breakout was just above the old all-time highs, and now you're holding. That's that. Now that's it for the week. Got a little bit longer here than I wanted to. Actually, I did forget to talk about gold, didn't I? Let's take a look at gold here in the last couple of minutes. Gold overall, just like we discussed all that time for a year now, uptrend, correction, moving on top of the balance zone, creating a breakout fractal. If hit, it would trigger a move that is directed in the old trend direction, which is exactly what we want to see after that correction here has been going on. The market created this breakout point here, this fractal, retraces inside the balance zone, just below the balance zone, but doesn't follow through to the downside. It does not approach the old lows from the correction there. Instead, it moves around, it turns around, and it's giving us now the chance on the lower time frame, the weekly time frame, to catch a very early move that could lead all the way up to here, which is the monthly breakout fractal, which could lead to a further move, to a larger move to the upside. This would be our fractal right here. I do have a buy order in here. My stop is inside the balance zone, and I'm just waiting for this to get hit and maybe take the market higher for a bigger move. We had been long in this. It's explained in the early to mid-year 2016 weekly recaps, and we are now trying to re-enter in the same trading direction, which is a bullish direction in gold. Thank you again for coming back to my YouTube channel, watching the videos, like the videos, and comment if you like. And I see you next week.